So, good evening, everyone. In this session, we will discuss something very important. Okay, it is related to drawdown and floating prices and etc. I can see many comments, and I'm talking about sorry the English channel and also the Arabic channel. The same question, same conclusions. I bought at, and now the price is at. So, what should I do? This is one of the important things that we do using every time lessons talk about, and I mean the risk management. So if you are buying on such levels without understanding where is your position in the market and how much you are willing to risk and how much your risk reward, okay, plus commitments, trust me, you will be gambling in the financial markets. Will be just gambling. And we don't forget that we have some people, uh, because of the many losses they afford each and every day, they becomes hypersensitive, hypersensitive, and that can cause ever that can cause sometimes OCD, which is the obsession compulsive disorder. Without forgetting the depression and some many psychology disease. I mean, sometimes can go to some diseases related to the DSM-5. It's something really powerful, guys. So please just understand this session so you can prevent these problems, because the first way to success starts within yourself, not understanding the algorithms or understanding the market psychology. No, how can you trade market psychology when actually you don't have a good mood and your psychology is worse than ever. Okay, so now the big questions, and if you goes back to your losses, you will find them that they are related to something. At least there is probabilities of psychology, but many of them are related to psychology problem. I mean, uh, something related to psychic. So I bought Urine Finance at $20,000, and now the prices are trading at 13,000. What should they do? Should they just take the loss and close the position, or should they wait? And what is your advice for us? So, guys, this is very important. Actually, it's very important because we have many solutions, but the one of them is letting that ship swim over the seas. Okay, and I mean by that is simply you bought here, okay, and the prices can go over here. This is the land, okay, and you are willing to have the price goes back. It can happen, and it can be not. So we should understand that there is a support at $10,000, okay, then another support at $6,000, then 4,500. This is the supports we have for urine fines. For example, this is correct supports, but we're taking urine finance as an example. So, guys, the first solution is, and I know many investors succeed with that. They let the position swim, and they will never consider this themselves losers, at least, or as long as their positions still open and they didn't sell. This is not loss, guys. Please make the difference between loss and drawdown. This is called drawdown. This is a floating prices. Okay, this is drawdown. This is not loss. Okay, this is drawdown. Simply the drawdown, for professional traders, they take the maximum possible to prevent highest drawdown. Especially if you are working for a hedge fund, the important things they are taking on as an advantage of your experience is how much is your drawdown. Okay, so when your drawdown is more than 15%, they call you a reckless trader. okay, and you will never work with them. And you can give them a positions with, let's say, 10 positions of a loss of 5%. They will never consider you as what we call the reckless trade. Why? Because the losses are exclusively stopped at 5% automatically. This man actually knows what he does. So if he commits to stop the position at 5%, our millions of dollars are safe. But when you come to see that to come to say to us that you have a drawdown of 50%, then our $1 million could we could lose $15,000 just sorry 500 15 $500,000 for just some you know little games. So this is something that hedge funds would never accept. So make sure that always you have your risk ratio, and you have also your drawdown calculated, and your risk management. So this is the very important thing, guys. So I want you just to fix your mistakes so you cannot repeat them, because the same mistakes will gives you the same results again and again. Okay, so understand what makes you take this action and stop it. If it's, for example, some euphoria, some adrenaline, some sometimes people are buying just because they are happy. Okay, and sometimes they want to revenge the market or against the market just because they want to revenge. No, guys, if you lost a position, you lose 5%. Okay, see you later. We lost today, but maybe tomorrow not. Also, if you heard about the probabilities, if for example I am willing to risk 5% to always win 10%, then if I have two positions, okay, two losing positions and one winning position, then I am equal. This is 101. But if I for example open a position without a money management, without a risk management, then everything will go against the market mood or the market's mood. So your money is at the mercy of the market. And trust me, they will never, they will never be graceful to you. So one of the solutions, guys, is to let the position and never buy with the loss. You can consider this waves here as a drawdown, and also there is something you can consider. If the market goes again, okay, you can sell with some uh, small losses. And if you don't want, then you may just wait, or you can sell here. Then you can wait another level here to buy again, and here and here and here. And if you want my advice, wait at 3,000 with a reversal candle like that. If not, then never buy. Okay, if you don't want to load, for example, to close your position when we have a pullback, then you can just let that ship swim and wait the charity of the market. Okay, so this is it. And trust me, the market will never be faithful to you, because these guys here are looking to your money, not the opposite. And you should always, when you want to open a trade, never buy with your full balance. Say, for example, you have $10,000 and you want to take this opportunity here. It's okay, but buy just the first $2,000, $1,000, $3,000. Okay, and then when the market, if the market goes against you and you have a maximum of drawdown, then you can buy again with the other quantity. So, for example, if I bought here, then the market goes back just to the half of the way, then we can recover, and we can close this position here, because this already gives us our benefits. Okay, so it's very important. So my advice to all people, okay, who bought and they have more than 30%, please do not sell. Okay, do not sell, because if you sell now, you will have a big loss later. Also, if you want to recover more, you can sell 50%, and then you can wait at the next low, and then you can buy again to recover this 50% you lost. But please be careful because many traders are making a huge mistake in the risk management. A huge mistake. Trust me, it's really mortal. It's fatal. What is that? Okay, so they tells you, okay, we bought here at 30, let's say $30,000. We have a 61 say drawdown. If I close here, I will have 61% loss in my balance. Okay, if you have 61, it's okay. But to recover, you need how much? 166. Okay, say for example, I bought here at $20,000 and the market visits the lows on what, let's say just this low here, so we cannot be exaggerating. Okay, for the 4,500. So here to here is 75 or 76 or 76 or 77% drawdown. It's okay. But how much do I need to come back to zero? I need 350% to back to zero. To recover my balance, I need this percentage. And it is not easy. Okay, it is not easy. So that's why if you divide your balance and you buy, for example, $10,000 with the first 1,000, the second 1,000, and the third 1,000. Okay, so you divide your balance for this level. Okay, and when it comes to the low, because already you have the key, there is nothing to be afraid and nothing to be. Many people are disbelieving this. It's very simple, guys. It's reality. Okay, so if you when you visit this level here and you see a reversal candle, and for example you bought first thousand, sorry, 1,000 and 1,000, another 1,000 and one, say okay, it's almost 5,000. When you achieve this level and when we visit this level and you see a reversal candle, you can buy again. Consider for example a hammer, so you will touch the level and then gets another, let's say, wave. You can buy another $5,000, and the market, when it goes back, okay, you will have the profits of the first 5,000 from here with almost say 176, okay, or 77. Then the second 1,000 gives you 60%. Then if you're lucky and we goes back again, you will have a lot of money. The first 5,000 will gives you 335, okay. The second 1,000 will gives you 200, and the third 1,000 will gives you 100. Sorry, the 200, and the last one will gives you 103% or 100%. Okay, so this is it, guys. Divide your balance. Divide your balance and understand money management. Okay, as long as you are trading spot, you don't have a risk. Okay, you don't have a risk. Don't fall into your psychological mistakes. Okay, if you have depression and you have fear and you say, okay, no, just trade the same way, because the what makes you buy at some say high levels with the full margin or the say full capital is simply the greed. Okay, you consider it like that, or and you calculate it like that. Okay, I buy here. If we go just to 100,000, I will have how much? I will have 300%. And trust me, algorithms, it is not programmed to achieve new levels. It's programmed to base on old levels and buy again. So if your dream to make, say, 200%, visiting, let's say, 100,000, okay, they don't want that. They want just the price to go back to the same low, and then we can make 500%, okay, just by retesting $20,000 or less than that. So you are programmed to say that this is just simple levels, but behind the levels there is some huge money. So these algorithms are programmed to work like that, guys. Okay, they don't want Bitcoin over $1 million, because this prices means just volatility. The volatility comes, okay. It's a profit for us, But as long as they are the same balance and the same market cap, we will trend the market to the maximum lows, and then we can buy. That's why I told you in Bitcoin, whenever you see a low, there is an opportunity to came back. Okay, let's see. Whenever there is a dump, whenever there is just a small, okay, small dump, there is an opportunity the market to recover. Why? Because this is the rules, guys. Okay, see here. This is the first pump, then a dump, then another wave are coming. You think these guys are messing with you? No, they know everything. Okay, they are ready to pay extra money to understand the meaning for each and every level. Sometimes they sell a lot of monies, okay, and they sell a lot of let's say cryptocurrencies in order to just hit stop loss and make the market conditions changed. Okay, so whenever there is a trend, just follow the trend and reduce the losses, guys. After we finish, sorry, before we finish this session, never trade futures. Never trade futures. Okay, these futures are against you. Are against you. High fees each and every day. There is percentage of fees. There is maker and taker when you close a position. For example, if you buy, if you say, for example, makes let's say $100, they will take, trust me, more than $15. I mean 50, sorry, not 15, $50 plus the fees and your daily fees you have to pay. This is against you. Okay, this is against you, guys. So that's why we see in some religious people are they saying, okay, it's forbidden to trade that, especially in Islam. Okay, they are not trading that. So we are here looking for business. So this kind of works are against our benefits. We will not trade it also. So guys, please prevent trading futures. Prevent trading futures. You can short selling, yes, but when you have a big probability, we have a big probability, because these guys, especially Binance, and I mean it, especially Binance, this Chinese, uh, this Chinese company is trading against the people, and this is the main reason for losing a lot of people monies. It's behind your loss. Trust me. I don't want to talk uh, about this kind of secret things. So this is all for our session. Thank you very much, guys, for listening to this session. Don't forget to hit subscribe button, also like button. Comment below if you have any inquiries or questions. Thank you very much. See you later.